Yeah, hello and welcome back. We have still some things about value-added tax to talk about, and especially now we are arrived at this point here. After cross-border deliveries, we now have to talk a bit about cross-border services. Well, the basic rules are probably to be discussed here. For cross-border services, we have a completely different system of rules, and very often we have no taxability in our home country when we have cross-border services. For example, cross-border services to an entrepreneur from another EU member state are in most cases not even taxable in inland because of the rule of 3A2. And you remember probably that is a rule which says if you render a service to another entrepreneur, then the place of the service is at the place where the other entrepreneur has established his or her business. So that means in cross-border cases in the country of your customer. And that means it will very often not be taxable. Um, That also applies, by the way, in cases where we don't have a customer from the EU. However, the technical details are a bit different there. In cases where the customer is a private customer, we have a special rule when the private customer resides in a non-EU country, so in a third territory, and when you render a service which is on a list in paragraph 3A4, the so-called catalog services, because they are listed in a catalog of services in 3A4. Also, that will have the consequences that such a service is then taxable in the country of the customer, at least from our perspective, so that there will be no taxability throughout the whole EU. Now, just to make that a bit more clear, let's illustrate it with a small sketch. So in the cases of 3A2, we have, in a cross-border case, a German enterprise. We have a foreign enterprise. We have a service under 3A2. So that means the place of the service is in the foreign country. So the taxpayer is the foreign customer, according to the reverse charge rules, which we can find in our German law in 13b1. Then the only obligation of the German enterprise will be to hand in the necessary data in the recapitulative statement, give it to the German fiscal office. The German fiscal office passes on the information to the foreign fiscal office, and they check if the foreign enterprise as customer correctly declared all that. By the way, naturally, because that exchange of information only happens between EU states, all the lower part below the red line is only happening between EU states. So if you render a service which is, covered by 3A2 to a business customer who is, let's say, established in England or in the US or in Australia or in faraway Eastern, then only the first consequences take place, that the service is not taxable in the inland, and all the rest we don't know because we don't know the foreign law in case of a non-EU state. Well, that is already an achievement or a result. Well, in the case of the second alternative, what happens is this. You remember my second alternative in the overview was the catalog services from 3A4. That was if you have a German enterprise and you have a private customer from a third country, then a service, if it's covered in the catalog of 3A4, leads to the result that the place of service is in the foreign country, and then nothing else happens because no EU member state will ever feel competent to tax that thing. Okay, so let's go a bit into details. To sum it up, in most cases of cross-border services, the service will not even be taxable in the service provider's own country. To simplify the life of the service provider, therefore, the EU has very often established the reverse charge rule, which says that the customer in the country where taxability appears will have to be the taxpayer. In other cases where that is not mandatory, at least the EU states often have an option to say that a foreign enterprise owner is not the taxpayer but an inland customer. They are, however, not always forced to do so. Only in cases of 3A2 and a cross-border transaction, the EU states have agreed that reverse charge solution is mandatory, always. Now, if you have a relationship between one EU enterprise in state A and one EU enterprise in state B, then the EU also wanted to establish a mechanism that a cross-border check of the situation can happen. So the enterprise which renders the service has to hand in information on that transaction to its home state tax office, as the sketch showed us, with the VAT identification number and the net amount of the service rendered, and the information will be passed on to the tax office in the state of the customer. Yeah. By the way, in German law, you find a very strange distinction in paragraph 13b, where the reverse charge rule is established. There is two subparagraphs, subparagraph 1, 13b1, and 13b2, which both establish the reverse charge mechanism for cross-border services. However, 13b1 covers only those cases which have to be announced or communicated in the recapitulative statement, whereas 13b2 covers the remaining reverse charge cases. That has been introduced probably only for the purpose that the fiscal administration gets in your tax declaration in Germany two different totals for cross-border services. One line for 13b1 is the total for all the services which you bought from other EU providers, and where the fiscal authority then can compare your declared number with the number which follows from the recapitulative statements from all other member states, and they can see if it matches. And 13b2 are the cases where there is no such control mechanism, so where you declare services which you bought just without their possibility to check. At least not to check it based on the grounds of the recapitulative statement. Well, let us have a look how things work. Imagine there is a German firm in Frankfurt and they have a question to a lawyer in Paris. So the lawyer in Paris gives his advice and charges 2,000 euro for that. Now, the solution now is we have to test 11 number 1 as usual, because 11 number 5 inter-community acquisition can only play a role if we have a sale of a good, a delivery, but never with a service. So let's check the routine number 11 number 1. Lawyer is an entrepreneur and acts within the scope of his enterprise and for consideration. That's just the usual framework. The first three criteria of this rule are simply fulfilled. Giving advice is a service, 3.9, and the place of service is because that's just a service between two enterprises where the customer has established the business. So in Frankfurt, that's in Germany, so service is taxable in Germany. This is now the other way around, you see. So it's a foreign provider and a German customer. then we naturally have taxability in Germany. Tax exemption, no, we can't see any reason for an exemption in paragraph 4, so it's fully liable to tax. The tax base is the net amount, and here that's the 2,000 which were paid, because the customer has to pay the VAT to the fiscal office himself. And then it's clear that the tax base can't include the amount paid, can't include the VAT. And the tax rate 19%, as always at the moment in Germany. In the moment when I speak, this is in 2023. And the taxpayer is the customer. That's a German firm under 13b1, which says if you have a cross-border service from an EU provider and it's covered by 3A2, then that triggers reverse charge. And the consequence that the taxpayer is then the customer can be found in 13b5. The arisal of the tax or tax point or so is at the end of that preliminary declaration period during which the service was rendered. That is in 13b1. The invoice of the supplier must be a net invoice. Supplier can't confirm VAT if he doesn't owe it. Okay. And because for the control you must know the VAT identification numbers of the two firms involved, the invoice has also to show the VAT identification numbers of the two parties involved. That is a kind of comfort for the tax inspectors or auditors, because when they see you do not show the VAT identification numbers of the persons involved on the invoice, they can directly trigger a kind of red alarm, because then you admit you didn't know the VAT identification number of your service partner, and that automatically triggers the suspicion that the recapitulative statement has not been handed in correctly, so they can directly see here is something to be investigated. Declaration duties are to be fulfilled by the taxpayer, that's the customer, the German firm. There is probably no big peculiarity. The only thing is that in France, the French lawyer has to hand in the recapitulative statement. And naturally, if the German firm bought the lawyer's advice for business reasons, so for entrepreneurial reasons, they can deduct again the 13b tax as their input tax. That is in 15.1 number 4. So you see, the only difficulty here was the place of service, and later to check if we have here 13b, the reverse charge mechanism. All the rest was relatively plain. So standard procedure as always, you just cover the testing scheme, go to step by step, and then everything is not a big issue. Another example, we have here consulting, so the guy is a hobby diplomat, and he is, apart from that, a German business consultant who lives in Cologne and has established his firm in Düsseldorf. And now he gives advice to a French firm and charges 3,000 euro for that. The solution is naturally simple as always. We have to test taxability. That's under 1.1 number 1. The consul is an entrepreneur. He acts within his enterprise, and for consideration again, the easy stuff. Giving advice is a service, and the place of service is under 3A2, where the customer, that's a French firm, have established their firm, that's in France. So it's not taxable in Germany, but presumably and nearly certainly in France. There will be a tax exemption, if ever, only under French law. The taxpayer will be, in analogy to 13b1 of our German law, the French customer in France. The invoice has to be written out with the net amount, because the German consultant is nobody who owes this VAT to the fiscal office, so he can't confirm the receiving of VAT, naturally. The invoice must again name the VAT identification numbers of both parties involved in order to establish control possibilities. The consul has to hand in a recapitulative statement, and at the end, the French firm will probably get input tax deduction in France for the French tax. And now the consul didn't render a tax-free service, but a service which was fully taxable, although in another country. So no tax-exempt transaction, and that means that the consul can deduct his own input taxes in relation to that service, because you only get your input tax denied if you render a service which is tax-free. And it's not tax-free. Here is no tax exemption, neither in Germany nor in France. So the consul can still deduct all his input taxes. Another example, torture is forbidden, however, tax cases are allowed. So we have an example number 3. Investor I from Ingolstadt in Germany permits an American firm to use his patent right in the US market. For this, he receives an annual license fee. Now, again, what's the solution? We begin at the beginning. So taxability 1.1 number 1. The inventor is an entrepreneur, acts within his enterprise, and for consideration, that's clear. Permission to use a patent right is a service. The place of this service is under the basic rule there where the customer has established his enterprise. So that's USA from the German perspective. That means no taxability in Europe. If we check 3A, subparagraph 3, 4, 5, 6, 7, 8, and 3B, and all the other special rules, no special rule changes this result of the general rule with regard to this special case, and that means it's not taxable throughout the whole EU. Peculiarities: there is no recapitulative statement because the US don't take part in that system as a non-EU state. And however, naturally, our entrepreneur keeps the right to deduct input tax as before, because he does not render a tax-free service, but only a service which is taxable in another country from our perspective. By the way, that the US, in their turn, do not know a value-added tax does not spoil anything, because from the European perspective, exactly as the right consequence comes out, every supplier of services in the US can offer therefore 0% VAT costs, and so also a German competitor should have 0% VAT costs if he or she offers services in that market. So it's exactly the right result, everything's fine. Number 4. Let's imagine there is a marketing agency in Mannheim, that's down in Germany, famous, nice, and develops a marketing campaign to improve the image of the government of Far-West-On. And the idea is to show everyone in the world that Far-West-On is a promising opportunity for investors, a nice country, and now the government of Far-West-On pays them 500,000 euro, and the question is, how is that solved? And here we have naturally again the same start as always. A marketing agency, entrepreneur, acts as such, gets money, so provides a service. The decisive thing is again the place of the service, and the customer is not an entrepreneur, so a kind of a private customer. However, here is a foreign government that is a non-entrepreneur, so 3A2 can't apply. However, we have here 3A4. You remember that rule with the catalog services. If your customer is a non-entrepreneur, to say it simplified, a private customer and similar customers. Then 3A4 says the service will be taxed at the residence or the statutory seat of the foreign customer. And marketing and public relations transactions are in the catalog of services included here. So the place of service is Far West, so it's not taxable in any of the EU states, and that means no tax here, and no recapitulative statement on that service because Far West is not an EU state. They don't take part in that automatic exchange system. And the marketing agency again keeps the full right to deduct the input tax because they do not render any tax-free output. They just have a fully taxable and liable transaction, although it's taxable in another state. No tax exemption, at least, and only a tax exemption could become dangerous for the input tax. Yeah, again, well, last but not least, there might be other special rules which govern the place of a service, especially in the case of the services listed or transactions listed in 3A3. Other might also be possible, so you need to check these rules too. Sometimes that also leads to taxability in a foreign state in cross-border cases. For example, if you do catering, your name is probably Katz, and Mr. Katz here is a proud owner of a catering service in Aachen, which is very close to the Dutch border. Now Mr. Katz gets an order to provide catering for a Christmas party for a Dutch firm, and that catering has to be done at the location of the customer's firm in the Netherlands. So the solution is here that taxability has to be tested. Catering is a service. 3A2 does not apply because there is a special rule for catering services. They have to be taxed where the catering takes place. That's here in the Netherlands. So not taxable in Germany, although in the Netherlands. Everything else goes on as usual. The taxpayer, well, this is not a 3A2 case, so we can't be sure that there is reverse charge under 13B1 in the Netherlands. However, the Netherlands have the right to demand reverse charge solutions in all cases where, from their perspective, the entrepreneur is a foreigner. Mr. Katz, as a German, is a foreigner in the Netherlands, so there could be a reverse charge obligation in the Netherlands. Here you only have the realistic opportunity to ask a Dutch tax advisor or to just ask your client if he can positively confirm that there is a reverse charge in the Netherlands so that you don't need to register and pay there. The recapitulative statement must be something which has very clearly defined and uniform contents, so optional contents cannot be communicated there. So only 3A2 services will be listed there, nothing else. So 3A3, as here, has to be kept out of that automatic information system. Yeah, so we can sum up. In many cases of cross-border services, there will be no taxability in the country of the service provider. And that automatically implies that tax exemptions for specific cross-border situations can only occur in rare cases, at least from the perspective of the provider. These exemptions are relatively unimportant. Naturally, when you are the buyer of a service from another country, you are interested in the question if there is a tax exemption. Naturally, there will be no exemptions in case there is no taxability. That's clear. Last remark, very often you come across the term inter-community services. That applies to these 3A2 cases which go across the border from one EU state to another. That term was just coined as a parallel to the inter-community deliveries and inter-community acquisitions, because both have that obligation to be mentioned in the recapitulative statement. However, you must always keep in mind that such an inter-community service has a completely different legal background on legal rules than an inter-community acquisition or inter-community delivery of good. Well, that shall be sufficient as an introduction to inter-community services and to cross-border services in general. And anything else, details and so, well, we do in another video. Thanks for watching and goodbye till next time. Ciao.